Hello, good afternoon, and welcome to this webinar for Landlords, which is all about how to get MTD done with FreeAgent. Just a quick terminology explanation. MTD, we are talking here about making tax digital for income tax, which is just coming over the horizon. My name's Emily Coltman. I'm FreeAgent's Chief Accountant, and with me today is my awesome colleague, Regina Pereira, who is here to answer your questions. Thank you very much again for doing that, Regina, and for being here.
You are welcome, Emily.
Thank you. What are we going to talk about today? We're going to talk about keeping MTD compliant records. What do you need to do in order to comply with the new rules around making tax digital for income tax? And what should your record keeping basis be? I'll explain what I mean by accruals or cash when we get to that point. We'll have a look at the framework for making tax digital for income tax, which takes the form of quarterly updates throughout the year, and then what's called a final declaration at the end of the tax year. So what do quarterly updates look like? What goes in them? And how do you correct any mistakes? And then we'll have a look at the final declaration, and we'll hear what happens at the end of the year. Just a few housekeeping points. We are recording today's session. If you have questions that you would like Regina to try and answer for you, please use the Q&A box as opposed to the chat box. If you put them in the chat box, Regina can't see them. So please put them in the Q&A box instead. In terms of what questions Regina might be able to answer, she'll be able to answer questions about making tax digital for income tax. Questions around how to do particular things in FreeAgent are probably better suited to asking the FreeAgent support team, who you can contact through your account. And Regina cannot provide you with accounting or tax advice. If you want to know, for instance, whether you can claim tax relief on a particular cost, that is whether you can use it to reduce the amount of profit you're going to pay tax on, that's a question to take to your accountant. Regina is not allowed to help you with that. We're not insured to help you with that. When you're asking your questions, please be polite and respectful. Bear in mind that we are all here to learn about making tax digital for income tax. So please do be polite and keep it professional. Thank you very much. We are going to be running some polls throughout today's webinar, and it's really, really helpful if as many people as possible can take part in the polls, because that helps us improve our content for future webinars. And also it helps us to put together new content that will help you further. So when is this new framework for making tax digital for income tax actually coming in? So as from the 6th of April next year, if you are a sole trader and or you are a landlord where you own property in your own name, you might possibly own it jointly with a spouse or relative, but you own property in your own name, you don't have a limited company that owns the property. Those are the landlords who will need to think about coming into making tax digital for income tax. And it's when your qualifying income goes over £50,000 that you need to start using making tax digital for income tax from the 6th of April next year. I will explain just shortly what I mean by qualifying income and what period you need to look at to ascertain whether you're over £50,000. From the 6th of April 2027, you will need to use making tax digital for income tax if you are a sole trader or a landlord and your qualifying income is under £50,000 a year, but more than £30,000 a year. 6th of April 2028, you come in if you are a sole trader or a landlord with qualifying income under £30,000 a year, but more than £20,000 a year. That is as of now. There might possibly be changes to that in the budget. We will keep an eye out for that, and we will let you know if there are any changes announced in the budget. So what do I mean by qualifying income? I mean pure income, so that's income before any fees or any other costs are taken off. And it is from your rental income as a landlord, that's qualifying income. If you are also a sole trader as well as a landlord, so say you rent out properties and you've also got, let's say, a dog grooming business as a sole trader, your sales from your dog grooming business also count as qualifying income, so you must consider both together. For instance, if you have rental income of £30,000 a year and your sales from your dog grooming business and that is sales before any costs come off, remember. Your sales from your dog grooming business are also £30,000 a year. You're going to be in the first tranche because you've got to consider 30 from both of your sources, and 30 plus 30 is greater than 50. When do you look at to see if your qualifying income has breached the threshold? You look at the tax return, the old style self-assessment tax return you do for the previous tax year. So you need to look at your tax return for 24-25. That's the tax year that finished on the 5th of April 2025. If during that period your qualifying income was more than £50,000, you're in the first tranche for Making Tax Digital for income tax. What do you actually have to do? So I keep talking about you have to join Making Tax Digital for income tax. What does that even mean? What do you have to do? You have to register with HMRC so that they know to expect Making Tax Digital returns from you. You need to keep your records digitally using what HMRC call functional compatible software. In other words, digital software, something like FreeAgent, and you need to use that to keep your records for your property rental. You need to record your income and your expenses for your property rental. You'll then need to file quarterly updates, which we're going to see shortly, and a final declaration at the end of the tax year. So if you're used to filing just one tax return every year, you're going to have quite a lot more filing to do, but I'm going to show you the filing process just shortly. It is nice and quick and easy through FreeAgent. So once you've registered with HMRC, what do you need to do on a day-to-day basis? You need to record your income and your expenses digitally. So that's your property rental income and your day-to-day running costs for running the property, things like if you pay the electricity bill, if you are paying a letting agent, all that kind of thing that you treat as day-to-day running costs, you need to record those digitally in your functional compatible software. HMRC does have a list on their website of functional compatible software. FreeAgent is just one of those products. In terms of backup for your records, if you're used to keeping a paper copy of receipts or a digital copy of your receipts, you've still got to keep that. You're not going to have to send that proof to HMRC under Making Tax Digital for income tax. You need to keep it though, keep it safely in case HMRC ever come and ask to see it. If they say, I want to see proof of your letting agent's fees that you've put in at £5,000 a month, you've got to have some kind of proof to show them. If you're using more than one package to keep your books, they must talk to each other digitally, and HMRC do have rules about what talk to each other digitally means. You cannot type or cut and paste or copy and paste information from one software package to another manually. Downloading a file such as a CSV file from another package and uploading it into another package, that's perfectly okay. So for instance, if your letting agent sends you a CSV file showing their fees, you can upload that into FreeAgent. If you're paying for that from your own bank account, you can upload that into FreeAgent. MTD compatibility, yes, absolutely fine. Do you or don't you have to keep digital records of absolutely all of your income? What you're having to keep digital records here is whatever you're going to report through your quarterly updates under Making Tax Digital for income tax. So if you have other income that does not count as qualifying income for Making Tax Digital, you don't have to make a digital record of it when you're doing your quarterly updates. So what does that include? If you're receiving dividend income, so you have a portfolio of shares, if you get bank interest income, if your bank pays you a bit of interest, if you have a job as well as renting out properties, and your job can be with your own limited company, that is not Making Tax Digital qualifying income. If you have a salaried job as well as earning money from your property rental, when you're thinking about do I or don't I have to come under Making Tax Digital for income tax, count only your landlord property income, do not count your job as well, that's not qualifying income. Sole trader sales, landlord rent, the only sources of qualifying income at this stage. We are expecting at some point that anything you earn through a partnership will become qualifying income, but at the moment that isn't. Partnerships are coming down the Making Tax Digital track at a later date. And by the way, if you own property jointly with a spouse or a relative, that almost certainly won't count as a partnership. It will count as your share of landlord rent, therefore it will be qualifying income. So you do not have to keep digital records of non-Making Tax Digital qualifying income like dividends or a salary. You do not have to keep digital records if you have disallowable expenses. So for instance, suppose you had a really, really good tenant living in your property long term. Your tenant then decides to move out. Because they've been such a good tenant, you decide to take them to the pub for lunch. Lovely, not a qualifying expense in terms of reducing the amount of profit you're going to pay tax on from your rental. So strictly speaking, you do not have to keep a digital record of that expense because it's not something that you're going to use to reduce the profit you pay tax on from your rental income. But if you're using FreeAgent, I would say it is good practice to still keep a digital record of those costs so that they're all in one place. Also, if you're using what we call simplified expenses, you don't have to keep a digital record of the actual costs behind it. For instance, suppose you are claiming the cost of mileage if you are travelling as a landlord. You don't have to keep digital records of your actual travel costs like your fuel and your MOT and what have you. You would just simply track your mileage and you would record that instead. When you're making digital records, you have to include the amount of the income or the cost. You have to include the date it took place and what category it's going into. So for instance, letting agents' fees are likely to be categorised separately from travel costs, which are likely to be categorised separately from entertaining nice leaving tenants. Let's just focus for a minute on income and how that is treated for record keeping purposes. A lot of landlords do receive income net of fees, like letting agents' fees. For instance, you rent out a property, the rent you are charging to your tenant is £1,200 a month. Your letting agent keeps back £200 of that as their fee and they give you £1,000 each month into your bank account. What you need to do is record £1,200 worth of income and £200 worth of fee cost. It is not sufficient under HMRC rules to record £1,000 worth of income. It's got to be £1,200 of income less 200 of costs. The reason for that is, remember when you are looking at do I or don't I come under qualifying income for Making Tax Digital, remember you've got to include your gross income, net of any gross of any fees. Fees come off afterwards when you're working out do I or don't I come into Making Tax Digital for income tax. So it is really important to record your gross income, net, fees as a cost. For each source of income, you need to keep separate records under Making Tax Digital for income tax and file separate quarterly updates. The good news is all UK property counts as one source of income. So you would, if you are a landlord, you need one FreeAgent account to keep track of the rent and the costs for all of your different properties, and then you would file 4 quarterly updates a year. FreeAgent, by the way, is quite comfortable with if you've got a mixed portfolio. Say you own one rental property yourself, and you have another rented property that you own jointly with your spouse. You would need to record 100% of the income from the first property and 50% of the income from the second property, assume you and your spouse owning it equally. And so your share is going to be all of the first property, half of the second. You can set a FreeAgent account up to deal with that quite happily. There's no need to have separate FreeAgent accounts for the different parts of your portfolio. What you do need to do, though, is if you are also a sole trader, for instance, if you are a landlord, you're renting out a property, you also have a dog grooming business, you're going to need a separate FreeAgent account to keep track of your dog grooming business, and you're actually going to have 8 quarterly updates to do in a year, 4 for your property, 4 for your dog grooming. The reason why FreeAgent does it like that, having a separate account for your sole trader, is because if you have, for instance, your letting agent is helping you with your books, you don't necessarily want them to see your sole trade income as well. Because you do that through separate free agent accounts, not only is the day-to-day bookkeeping simpler because you're keeping those two pots separate, you also have that added level of privacy. Accruals or cash basis, and what does it mean? The accruals basis means that you count your income as happening when it was earned, and you count your costs as happening when you incurred them. The default for landlords is to do it the other way and use the cash basis. So you count your rent as when you received it, not when you were due to receive it. And you count your costs when you paid for them, as opposed to when they fell due. You might, as a landlord, possibly receive your rent in advance or in arrears. That doesn't matter if you're operating the cash basis. It does if you're operating the accruals basis, because you have to think about, well, okay, did I receive October's rent in September or in November? When did you get it? When did you earn it? If, by the way, you are also a sole trader as well as a landlord, you need to use the same basis for all of your different trades. So suppose we have a landlord who's renting out property. They are also a dog groomer. They also design websites. They must use the same basis, accruals or cash, to do both their trades bookkeeping, both their dog grooming and their website business. But for the landlord income, you can use a different basis. So you have to use the same basis for all of your properties. You can't have one property on accruals and one on cash. You have to use the same basis if you are also a sole trader and you've got more than one trade. You must use the same basis for each trade. But you could use accruals for your trades and cash for your property. That's allowed. Which is your quarterly update. So I've talked about what records you need to keep. Now let's think about, well, what does a quarterly update look like? It looks like this. Total income, less your total expenses, gives you your net profit, which is how much you're going to end up paying tax on. If I were to click that drop-down arrow, there is a breakdown of the expenses underneath that. Remember that for each source of income, you've got to keep records and file separate quarterly updates. So if you're a landlord and you don't have any other sources of qualifying income, you are going to file all of your property information on one set of quarterly updates. If you are also a sole trader, you're going to have to do two sets of quarterly updates, more if you've got more than one trade. What you'll see here is that I've got what's called tax year quarters set up here. You can see they go to the 5th of the month. So those are the typical quarters. So you would include transactions that took place within that particular quarter. FreeAgent will put them in the right place for you. Make sure that you've got the accruals or cash basis set correctly in FreeAgent, and it'll put the transactions in the right places. If you prefer to have your quarters ending at the end of a calendar month, that's fine. Those are called calendar quarters. You could have the first quarter ending on the 30th of June and the 30th of September for the second, and so on and so forth. That's also absolutely fine. You need to try and get your records as accurate as possible when you file quarterly updates, but HMRC have said that they won't at this stage be charging penalties for inaccurate quarterly updates, so long as you've done your best to get them accurate. If you file a string of zeros through the year and then put everything into your final declaration, HMRC are not going to like that. You need to get them as accurate as possible, but if you do find you've made a mistake, it's not so much of a problem. You just put it right as soon as you've realised you've made a mistake. So supposing you filed your quarterly update that covers the period to the end of June and you realise you've missed off a cost. What you do is you add it in as at the date it took place. Then what will happen is when you file your next quarterly update, the one to the end of September, what will happen is that correct year-to-date figures will get sent to HMRC at that point. Because under Making Tax Digital for income tax, you're not filing just one quarter, just the next quarter. When you come to quarter two, you file up-to-date figures for the entire period so far. So any errors will get scooped up and sent in the next quarter. You also have the option to record what's called adjustments and allowances. You can complete those at any time of the year. Those would be things like private use adjustment, for instance, if you are occupying a rented property yourself. You can complete them, as I say, at any time of the year. but they will only go to HMRC if all the information on the page has been completed, including this bit about, for instance, is your rent or room income shared? Are you non-resident? FreeAgent will do some of them for you automatically, but others you're going to have to fill in yourself. So I've now got a short video to show you so you can see what it looks like to file a quarterly update to HMRC. So what you do is you do send update, and then you will see the option to, there we go. You'll see the option to pick which quarter you want to file for. And as I said, it's year-to-date figures. So you're looking at up to the end of that particular quarter, year-to-date figures. It'll highlight for you how you've chosen to work those out. Then you click the relevant button to submit to HMRC, and then it will start sending your data. Notice I haven't had to put in any details like login information. Those are already there, because when you register with HMRC, what you also need to do is you need to set up your connection in FreeAgent to say, okay, this is where I want my data to go to HMRC. This is my data. Please put it on my record. You don't have to do that every time you file a quarterly update. So now let's address the final declaration. So the final declaration is to fill in the blanks. The quarterly updates tell HMRC about your income through the year from your qualifying income sources. The final declaration is going to include everything else that you might recognise from putting on a tax return, bank interest, dividends, and the like. Under old style self-assessment, you reported everything in one go. You reported everything after the end of the tax year, your landlord rental income, your salary, any sole trading income you had, your interest, your dividends, all on the one tax return. Under Making Tax Digital for Income Tax, you do your qualifying income reporting through the year in the quarterly updates. Then under the final declaration, you say, okay, I confirm this was how much I got from my rental income, this was how much I got from my sole trade. HMRC will already know about any employment income you have from your job because your employer will have been reporting that through the year. You need to check that your record on HMRC's end matches what you think your employer paid you. So the final declaration, all you need to type in is any new sources of taxable income or any sources of taxable income that you have that HMRC don't know about. I say taxable income, so you would leave out things like interest from an ISA, which is free of tax, just like when you do your tax return now. So here we are towards the end of October 2025. What can you do now to start getting ready for Making Tax Digital for Income Tax? I would strongly recommend that if you're not yet using functional compatible software, if you're still using paper records and you're not sure about using digital software, start now. Start getting into practice and get yourself quite comfortable with the record keeping that you'll need to do once you join Making Tax Digital for Income Tax. HMRC are running a testing phase, so they're letting people sign up for Making Tax Digital now, ahead of the game, and start filing quarterly updates. You might want to consider joining the testing phase. We're going to be sending a follow-up email with information about what you can do next, and that will include information about who's eligible to sign up for the testing phase. That might well be something to think about trying. Thank you very much to all of you for coming and listening today. I hope you found it useful. Thank you for sending in your questions, and many thanks to Regina for answering the questions. That's fantastic. Thank you very much. We will review any questions that Regina hasn't had a chance to answer and see what we can do with them in terms of using them to build other content that might be useful for you. Thank you again very much for your time today. Very grateful, and have a good afternoon.